Hansa Investment Company is a globally diversified, multi-asset class investment portfolio that seeks to identify compelling investment opportunities across a wide spectrum of assets, many of which are otherwise hard to access. The company looks to conservatively grow capital over time through investing in a blend of best-in-class public and private equities, balanced by more defensive all-weather investments. Its investment advisor is a smaller, dedicated fund management group with significant skin in the game, which ensures a high alignment of interest with shareholders and a focus on investment performance rather than asset gathering. 1. Hansa Investment Company offers access to a truly unconstrained, long-term, multi-asset strategy. Hansa's portfolio differs significantly from a traditional 60-40 portfolio and has performed strongly. The manager adopts a four-sleeve approach, which combines a core regional and thematic sleeve, blending active and passive equity funds, with a concentrated high-conviction portfolio of direct global equities, with particular emphasis on downside protection, and investments in diversifying and private assets. Hansa's manager has a deep knowledge of different asset classes that allows him to combine various strategies into an attractive portfolio. The manager has consistently held around 80% of Hansa's portfolio in equity markets over the last decade, in line with its patient, long-term investment approach. It normally aims to ride out market volatility, which it considers an opportunity rather than a risk to long-term returns. Its portfolio positioning during the tariff turmoil in 2025 is a notable recent example of this approach.
The US economy was in pretty good shape. We didn't see the excesses that you see normally at market peaks. We didn't see the problems within the consumer or the banking sector normally. So its valuations were high.
That said, the manager can at times add to Hansa's diversifying sleeve to provide the portfolio with an alternative source of returns, whilst dampening volatility and displaying a low beta to the equity market. Hansa's manager has a wide range of diversifying assets at his disposal, including debt investments, multi-strategy hedge funds, event-driven and equity market neutral hedge funds, and quantitative funds. In the past, Hansa's diversifying sleeve significantly outperformed a traditional bonds portfolio. 2. Hansa favours US equities while seeking diversification to counter uncertainty. US continues to represent the majority of Hansa's equity exposure, as it maintains its positive view on the US economy, given its high level of innovation, inherent entrepreneurship, and sustained robust consumer spending. However, given the current valuations of US equities, early signs of a potential AI bubble, and geopolitical risks, including the populist pivot in the US, the manager puts emphasis on diversification. Firstly, it involves blending passive ETFs with active funds, which may be underweight the Magnificent Seven stocks. Secondly, Hansa's manager aims to manage concentration risk in the tech portfolio by including venture investments. Finally, the manager maintains regional diversification of Hansa's equity portfolio, with an emphasis on Japan and emerging markets, including Asia. Hansa's manager increasingly blends varying investment styles, for instance value and growth, and factors. 3. Hansa's recent combination with Ocean Wilson's Holdings offers several benefits. In December 2025, Hansa Investment Company completed its all-share combination with Ocean Wilson's Holdings, one of Hansa's holdings. This transaction, together with the earlier sale of Wilson Sons, Brazil's largest port and maritime logistics company, by Ocean Wilson's Holdings, greatly simplified the group's structure and combined two complementary portfolios. The combination provided greater scale and was coupled with a switch to a tiered management fee structure of 0.8% up to £500 million of the combined group's net asset value and 0.7% thereafter, compared to 1% previously.
Having a scale of assets that's not too large that you can't invest, but having enough kind of say that you can go to people and say, look, let's talk about fees and let's try and ensure that we always have the least possible fees.
The combined group will also introduce a new capital allocation policy that is expected to enhance returns over time, mainly through the implementation of annual on-market share buybacks of between 2% and 4% of its issued share capital. 4. Hansa seeks to grow its exposure to private assets. Hansa's evergreen structure, long-term investment horizon, and the manager's strong network allows it to invest in private companies through private equity and venture capital funds managed by carefully selected managers. We believe that exposure to private markets has become increasingly important, given the trend of companies staying private for longer.
More and more companies, we think, will stay within the private space. So we think by having exposure to private equity will give you, enable you to play those assets and to benefit from that trend.
The combination with Ocean Wilson's holdings has immediately increased Hansa's exposure to private equity from less than 1% of assets to around 10% through the addition of a mature, self-funding portfolio across US, Europe and Asia. The manager aims to further increase that exposure to 20% over time. If you would like to find out more about Hansa Investment Company, please visit the Edison Group website.